mic going into record.
Okay. Welcome everybody. Steve, did you play the heavy metal music? We didn't have any music, folks. Sorry about that. Hey, thank you for being here this evening. We should have Steve up here, doing an introduction, right? No, you're not going to stick your head on the camera? Okay. We're going to keep this casual, as you can tell already, because I want all of you to be engaged and have an enjoyable next 90 minutes. And I've got Steve Anderson, my fearless leader, your fearless leader, over here behind the camera with about 5 computers in front of him, making sure that we've got a great broadcast today. I'm pretty impressed. I mean, this guy, he's pretty techie for his age. I don't know what's going on. He was born with a computer, next to it in his crib or something back in the day. But all right, okay. So he says moving on. He doesn't want me mocking him anymore, so we'll move on. Okay, welcome everybody. We're letting a few people join us. Now don't forget, this is being recorded. I'll probably repeat that a few times for anybody that joins us late so they don't get freaked out. My name is Mark Kohler, your host tonight. I'm a CPA, attorney, author, radio show host, and most importantly, an entrepreneur. I guess I could say too, I'm a part-time RVer. I've spent a few nights in RVs with the family. That's our favorite family vacation. We've gone up the California coast in an RV a few times. Also done Jackson Hole. So anyway, for what it's worth, I know that it took me a while to even understand what a toad was. So I'm not going to talk too much about the technical aspects of RVing. But what I am here to talk about is tax, legal, wealth building, just the American dream. And so I'm really, really excited to share my passion with you and help many of you find some answers to some of the questions you may have about your RV and building wealth and tax write-offs and making more money and yada yada. So what we're going to do is go through several sections. I've got some notes here. I've got my Mountain Dew. I'm ready to rock and roll. So I've got my notes, and we're just going to go through some different sections. And after about a chunk of presentation, we'll do some question and answer. So make sure you are playing with the live chat. I think all of you can see what's going on with the live chat. Please, if you're going to ask a question, make it clear to the point, and maybe no longer than 2 or 3 sentences. If they get a little long with some scenario, an example, they're really hard to repeat, and frankly, some of the people may not be as interested in hearing a question like that. So please make sure you ask questions that pertain to the topic and not your personal life. What should I do tomorrow? I'll give you my contact information after this. So if you want to have some specific consultation to you, we've got and I'll introduce our firm here and who we are in a moment, just so that you have that background too. But if you're just joining us again, this is fully recorded. I'll be doing Q&A throughout, and at the very end we'll do some more Q&A. I want to get this little background. I'm a partner in a law firm and an accounting firm. We've got 5 lawyers and about 7 CPAs. We share the same phone number. We're in the same building across the hall from each other. A lot of clients like that synergy of our lawyer and CPA being on the same page. I know that some of you may have the impression that, oh my gosh, Mark's a tax lawyer, and lawyers and CPAs are expensive, I could never afford them. Please know we have tailored our firm for the last 15 years on helping small business owners and just regular middle-income Americans all around the country. Now, there are very expensive tax law firms that help the big dogs, but that's not us. We love to work with the work camper clients, and we've been working with RV owners for years. So don't be intimidated by that. Now, I have a weekly blog, a national radio show every week, the podcast to iTunes. There's going to be plenty of ways to get in touch with us and keep learning. A lot of content for free, and then some content that you may want to invest in, which would be a tax write-off as well. We'll talk about that. But anyway, okay, so that's us. I'm currently living in Idaho, used to live in California. For those that know me already that are on the broadcast here, I know that some of you have used our firm. You're checking out the little webcast here, and you're a regular follower of Steve Anderson and the team, Coop and myself. Welcome back. I hope to share something new today for those of you that have already watched a number of my videos. So, okay, without any further ado, Steve, am I missing any housekeeping? Anything? Okay, we're good to go. All right. So we're going to get to the whiteboard here in a minute. But here's my number one point. And when people come from around the country, they call me on the phone. We help clients in all 50 states design their tax and legal structures and help them with their business and their wealth building and their investments. Clients are like, Mark, oh, so you've written a book on how to save taxes. How do I save taxes? So we have a 25-point checklist. And when we meet with a client, we'll go through this checklist and we'll come up with ideas and review it. Heaven forbid your CPA actually have a conversation with you, right? If you're going through, many of you that have gone through Steve's training already have been forced to read my book, what your CPA isn't telling you. And it's so liberating to realize that not all CPAs are the same and a lot want to talk to you. So anyway, when we have this conversation with our clients, the number one tax strategy, and as we go through today, if you want to know how to write off your RV is a tax deduction. If you want to build more wealth, if you want to have less stress living month to month financially, maybe have a little more financial freedom, there's one strategy that opens up all these different windows of opportunity. And when I say it, I don't want some of you to just turn off your computer. You got to hear me out. But that one strategy is I need all of you to have a small business on the side. Now, it doesn't have to be a big business. And I know some of you maybe have had a bad experience being an entrepreneur. I know that some of you have never owned your own small business. So just chill out for a minute, hear me out, because this is important. I need you to see the possibilities that come with this. And you are the captain of your own ship. It doesn't have to be overwhelming. It doesn't have to be a big investment. In fact, it can be something, in fact, it better be something that you're passionate about and you love. So here's the reason why. As an accountant, now I'm going to give several reasons here, but let's just get the accounting thing out there right off the bat. Millions of Americans, here it is. Oh, am I supposed to use blue? I think I am. The guys wanted me to use blue instead of green. All right, here we go. If I look at a tax return, there we go. Here's my 1040. Many of you have seen the infamous 1040, right? This is the front page of every one of your tax returns from last year. Down here in the right-hand corner, what is this? AGI. This is the line. This is the line. Above the line, below the line. You've heard presidential debates on this. I know it's ugly hearing Trump and Clinton talk, but they're going to talk about above the line, below the line. And here's the deal. Any expense below the line sucks. It's terrible. We hate it. Any expense above the line is awesome. Now, millions of Americans collect their retirement, collect money from their investments, get their paycheck, pay taxes, and then pay for all sorts of expenses below the line. Cell phone, travel, dining, entertainment, PDAs, laptops, computers, cameras, an RV, a truck, I don't know. All these expenses below the line come after paying taxes because they're generally considered personal in nature. Or are they? When you have a small business, even if it's a small business on the side, then these deductions become a write-off above the line. And you start seeing your tax bill go down and money go into your bank account. And that is the beginning of wealth building. We get out of debt, we pay our bills, we live on rice and beans when necessary, but we have to have something, there's no glass ceiling, where I can start building some wealth. And that's what opens the door to write off the RV. Now we're going to talk about domicile and how to write off the RV. And for those of you that have heard me give this speech before, don't turn off your computer. I'm going to hopefully share again some new concepts tonight. But it's really important that we talk about this business ownership thing first. Okay, so one, I want you to have a small business for the tax write-offs. And we're going to go through some tax write-offs here. I'll hit some highlights. But also the thing is, if you're on a fixed income, even with a day job, because it's generally fixed, there's this glass ceiling, what we want to do is make sure that you have the potential to make more money. And this is where the small business comes in. Now I'm going to talk about some steps to starting a small business here in 2 seconds. But the first concept or step in this whole process, I guess I should say, step one, is to do something you love, something you're passionate about. Get in that RV, hit the open road,
and sell something. Sell a product, sell a service. Go visit your rental properties around the country. Manage your business with your RV as a business vehicle. Now that's the concept. Now we're going to get into the nitty-gritty, and again, I want some of you writing down some questions, because here in a minute I'm going to open it up for some questions this first round. But a lot of people feel that there's barriers to small business. Number one is, Mark, first of all, I don't have the money to start a small business. Guys, there's so many small businesses you can start with very limited investment, selling a service, doing an internet-based business, doing a product-based business that you simply wholesale, or a service that you're providing, and you're traveling in your RV to get there. Here's the point. Don't feel like you have to spend a lot of money to start a small business. I've got radio shows and all sorts of content on my website of what business could work for me. And we do regular brainstorming sessions on our radio show and on our blog and on all sorts of little videos to help clients come up with those ideas. Number two, some clients say, well, Mark, I've never ran a small business. I don't know how to do it. Well, folks, this is the beauty of this. Work Camper Small Business RVer program is all about helping you start a small business with your RV as a tool. It's just like a tool in a toolbox. We're going to pull out the RV and use it. So Work Camper's goal is to help you succeed as a business owner. Next, a lot of people are like, Mark, I don't even know what to do if I was going to start a small business. My biggest suggestion is think about what you love to do. I do a radio show every year, how to turn your hobby into a business. Now, as long as your hobby is legal, I want to point that out for some of you. Steve warned me. But no, as long as your business is legal, let's make money at it. Let's have fun. Let's go out and do something you love. For example, I want to put some examples on this. And I know some of you want to get into the nitty-gritty technical. I'll get there. I want to blow your brains with some ideas today. We got an hour and a half here. But let me give an example. This is kind of a funny one. I had this client. He came in. And what's funny is I meet with 1,000 clients a year at least, one-on-one. I mean, that's 3 or 4 consults a day, 365 days a year. Well, maybe 320 or something, you know. But I'm going to meet with 1,000 clients a year. And it's funny, I have clients come to me with ideas all the time. That's my job, is to help them succeed at their idea. And that's what we're going to be talking about tonight, of course. But it's funny, I have clients come with me with ideas. And some of them I'm like, oh my gosh, that is the coolest idea. You're going to make so much money. And then I have other clients that come to me and I'm like, oh my gosh, that is the stupidest idea. They are never going to make money at that, right? And what's funny is the guys that have these awesome ideas, they completely fail. And then the clients that have these stupid ideas make a ton of money. It's so funny because ultimately I find the variable, and Steve and I were having lunch today and talked about this variable here. I'm going to give my example, but this is a little into it, is that we talked about how so many people feel like I'm going to fail at business or I failed before. And they say 60% of small business owners fail in the first 2 years. But I like to redefine the word fail. Maybe that's, and there's been all sorts of studies out there that statistic is not accurate. Because it's not failure for the person, it's that they changed the business model and went to something else. I don't think business owners fail. I think sometimes they give up. But a lot of business owners just change. They are adaptable. And that's something that I think is so important here, is that if you're in love with a project, be in love with the industry, not that specific idea. Because you know what? You might need to modify it. And that's okay. I want you to be successful in your business, and I'm going to be here for many years to come. I know Steve and his family, you know, what do we need to say? Knock on wood that we're going to live, you know, another 10 or 20 years at least and not die. But we're going to be here to help you along the way. And so I guess what I'm saying here is a good small business owner is adaptable, and they're willing to not give up, and they're resilient. Guys, you're going to lose money here and there. You're going to make a bad decision. You're going to get a bad rental property. You're going to get a good one. You're going to have a good client and a bad client, whatever. Be patient. Be diligent. Be persistent. Don't give up. So anyway, this client of mine, he came in with this idea that I thought was stupid. He came in and he goes, Mark, I'm going to build parts for He said, I'm going to build parts for model trains. And I was like, Oh, so toy trains. Oh, and I used the word toy. Oh, I got in trouble real quick. They're not toy trains. These model trains are to scale 48 to 1, 36 to 1, 12 to 1, whatever, right? So I think Michael Jackson had one that was 8 to 1 or whatever, some, his little train at Fantasyland, wherever he lived. But the point is these people that are into train collecting are avid and just, they love it. They're passionate about their trains. Anyway, so he tells me he's going to start making parts for his trains. And I'm like, okay, yeah, don't quit your day job anytime soon. Go ahead. No need for an entity. Good luck. Just have fun. Go out there. And I told him, track your expenses. Let's see if you make any money at it. We're going to talk about that. But I said, go ahead, go for it. So sure enough, 6 months later, he shows up at my door. And he's like, Mark, I just quit my job. I'm like, oh my gosh, I told you not to quit your job. He's like, no, Mark, I'm on track to make 100 grand this year. I'm like, what, selling toy train parts? And he goes, don't say toy. And I was like, okay, sorry. But he goes, I'm going to make 100 grand this year. I was like, you're kidding me. And so what he had done is put together these little molds and lead and in his basement, and his kids would come home from school and he'd put them to work, and it became a family affair. And they build these little these train parts, and they put them in FedEx packages and ship them all over the world. He got a great little website, and he wasn't great with the web. He wasn't great with business, but he loved his trains, and he loved what he was doing, and he was adaptable. And he was persistent. And another thing is, he didn't rely on his business to pay his bills until the business was able to help him pay his bills. A lot of people will try to survive on their business before it gets off the ground, and then the business can't handle it, and they blame it on, oh yeah, I'm a bad business owner, business sucks, or my business failed. No, your business was doing great. You just tried to extract too much profit out of it when it wasn't ready to pay you that much profit. Now, some of you may be thinking, this is all touchy-feely. These points are extremely important, because these are the concepts that get you up in the morning to keep working hard on your business. They keep you up at night writing down ideas. They help you stay strong and resilient. So anyway, my guy quit his job, and I almost get emotional talking about it, how he was literally walking on air coming into the office and walking out, and how his family was excited about his business. Now, I didn't plan to do this, but I'm going to say it right now. What happens if he built all these train parts in his basement, loaded them up in his RV, and then drove to 2 or 3 trade shows around the country in his RV selling his train parts? You think his RV would be a write-off? Darn right. Now his RV becomes a delivery truck. And now he's doing business out of his RV. In his RV, that once may have seemed like kind of a money sucker, is now a money maker. And that work camper concept of making your RV earn money for you just took on a whole new picture. Guys, I have clients doing this. Some with just starting out, some with reasonable success, some with phenomenal success. Everybody's different. You don't have to get rich doing this. But here's my point. At least have a small business on the side. Something you're passionate about, something you love. And then let's make some money at it and turn that RV into a money maker. Guys, many of you don't know what you're sitting on. You're sitting on a gold mine here. A way to generate more tax write-offs, and also kind of a catalyst to take on something new in your life, to better live that American dream. And maybe it's inappropriate for me to say this, but I'm going to say it. I read an article the other day. I almost get a little choked up talking about it. I told Steve about it. The article was titled 60 and over and unemployed. People that are 60 and over, and they're like, Mark, I got contacts. I got skills. I'm still a valued person. I got lots to give, but no one will hire me. There's millions of Americans out there, and some of them own an RV. I don't know, maybe some of you are in that situation. But no matter how old you are, don't worry about getting hired. Worry about making your own business. Create your own destiny. And start it on the side. You don't have to quit everything to test the market out. Anyway, okay, there you go. That's my point number one. And it's a big point. And if there's anything I can emphasize, please don't give up on WorkCamper and what Steve and Coop are trying to do. Don't give up on all these ideas. Continue to follow the newsletter. Follow my newsletter. Continue your study and education. Because knowledge takes away a lot of fear. It gives you power to make better decisions. When we're in a crisis, we make bad decisions. But when we have knowledge and a little more freedom, we make better long-term decisions, don't we? So I am grateful you're here. I feel like I'm preaching to the choir, right? I'm in Sunday church, and I'm preaching the gospel to the people that should be here, right? And you guys are here. So, okay, now, I'm going to give one more concept here, and then I want to open it up for some questions. Here's the deal. All of you, and all of you can say this at your computer. I want you to repeat after me. Because, well, no, let me give the example first. Let's say that your brainiac idea is you're going to start a lemonade stand. That's your idea. You got the best lemonade around, it's better than country time, and you're going to open up a lemonade stand, and you're going to take your RV, and you're going to drive it to different locations and sell lemonade on the side of the road. Maybe even sell some jerky too. You seen those guys? Okay, but anyway, you're going to go and sell lemonade. Now let's say you get your ice, your sugar, your cups, you're geared up with your containers, you got a sign, you got your table, and you go down on this little side road on the beautiful outside a national park with your RV, and you park on the side of the road and you go, lemonade for sale, best lemonade in the world. Are you in business? The answer is no. You are in startup mode. Now, are you going to get a write-off for all those expenses? Sure, once you're in business. Now, when does the IRS say that your lemonade stand is in business? When do they say that you've now turned the corner in business? Do you have to make a profit? No. You have to sell 1 cup of lemonade, and now you're in business. So, what I want all of you thinking about, and this is what you're going to do at your computer right now, is that all of you can be a sole proprietor right now. It's technical. I mean, we're going to have to fill out some IRS forms, right? I mean, we're going to file for a DBA, right? Or a tax ID number. We're going to file with the state. Oh, no. All you're going to do at your computer right now is say, I'm in startup mode. That's it. All of you say, I'm in startup mode. You're there. See, you're there. Tonight is a tax write-off. I want you tracking your expenses now. So, you're going to be in this mode of startup. And expenses that you may have incurred 3 months ago are still deductible in your business this year in 2016. Even though your business doesn't start until here, when you sell a product or do your first commission or service or whatever you're going to start, this is when the business starts, but you're still in startup mode. And so my big point is, all of you, right now, create a spreadsheet. Go back and track all the expenses that you've been incurring for the last 3 or 4 months. There's no time period with the IRS, but let's just say 3 or 4 months. In this year, 2016, since January, what expenses have you incurred? Maybe even your WorkCamper membership is a business expense. I say it is because it's helping you build your business. You're getting involved in the Gold program with the RV school, and you're like, business RVer, I'm there. Guys, that's a tax write-off. Track your expenses. Cell phone, Apple Watch, computers. Track your expenses and start building your business plan and strategic plan, which we'll come to in a minute. But right now, you can start tracking your expenses and getting ready to launch that business. And all the expenses you've been incurring in 2016 are a write-off right now. Well, not right now, sorry. You need to be tracking them right now. They're going to be a write-off when you sell that first cup of lemonade. So, point number 1, have a small business. Be passionate about it. Don't give in. Be persistent. Be adaptable. Be flexible. Start tracking your expenses now. You're in startup mode, bare minimum. All of you, have an open mind to a better American dream. Something that could create more cash flow. Something that could create some more wealth. This could be as easy as a rental property by the grandkids. And you're going to take the RV to the rental property and work on it for 2 months and come home. That's a tax write-off. See what I'm saying? This is huge. Guys, Bottom line, people say, Mark, I think it's risky to start a small business. I think it's risky not to start a small business. Are you kidding me? Don't you need some extra income to fall back on? Maybe some extra wealth to pay the bills? And maybe something that gets you up in the morning that you're excited about? Anyway, that's my story. So that, my friends, is the beauty of tax and legal planning. It's just the foundation for what I want to do to help you build this wealth and better live your American dream. So, woo! All right, Steve, do we have some questions? Anybody with a question? Maybe something?
Marianne asked, is it worth the trouble if your income is low and in a lower tax bracket, say $40K for a family of 2?
Okay, so Marianne, right? Mary or Marianne?
Marianne.
Marianne says that, does it make sense to do this, Mark, when I'm in the lowest tax bracket and I'm not making a ton of money anyway, family of 4, under 50 grand a year? If Trump has his way, you'll pay 0 tax, which I doubt he'll ever accomplish, but, and I don't want to get political here. I'm not saying I'm pro-Trump, pro-Hillary. Let's be safe. That's a whole other video, right? But Marianne says, Mark, is it worth it? Do I really need to be doing this? Marianne, I'm just going to repeat it. You heard what I just said. It's so worth it. Are you kidding me? It's risky not to do something. Why not generate a little business on the side? I'm going to just tell 2 examples of my own family. If I could turn the camera around, you see a bunch of clothes in the back of the studio. My daughter, who's in college, goes to thrift stores, buys clothes for $5 or $10 and sells them for $50 or $60 with her Instagram, Etsy, social media crap that all the girls around the country buy, you know? She is selling stuff all over the country at approximately 10 times what she pays for it. Are you kidding me? She's doing it on the side. Marianne, if you love thrift store shopping and putting stuff on Etsy and taking pictures with a cool kick-butt camera, make some extra money. Another one, I was talking to my wife last night. I'm trying to talk her into this. We're big Herbie fans. You know Herbie 53, the little bug? We have a Herbie. And my wife is a huge Dean Jones fan. She got to talk to him once. She loves Dean Jones. Anyway, for you out there, we love Herbie. All the shows. Anyway, she knows how to make these Herbie little jumpsuits that have the 53 on it and everything. And when people drive, you know, when we drive to Halloween parties and whatever, we wear the little white helmet and the little jumpsuit that Dean Jones would wear. Anyways, I'm like, honey, those are awesome, and people want to buy them from her. I'm like, they didn't take you that long to make. You cracked the nut. Why don't you start selling these online? And she's like, oh my gosh, that's a great idea. I might do it. She gets sick of me because I'm the consummate entrepreneur. I'm trying to sell everything I can because I love to sell. I love to be in business. Anyway, Marianne, do something you love. Make some extra money at it. Now this is important, guys. Everybody listen, this is important what Marianne's really getting at. We're not doing this to save taxes. We're doing this to be wealthy. Now, saving taxes is part of the equation, which helps you be more wealthy. I don't want you to set up a business just to lose money. That'd be stupid. I don't want you to just set up a business to lose. I want you to set up a business that makes some money, and all these write-offs that are below the line, they now come above the line. Let's say you could write off your cell phone, your RV, depreciation a little bit, some mileage, maybe a computer here and there, a cell phone, some internet, your work camper fees, whatever. Let's say you drum up, I'll be conservative, $500 a month. Oh man, I know you could do $1,000 a month. By the time I start writing off your RV, let's say $1,000 a month, okay? $1,000 a month in write-offs. Crap you were paying for below the line before, now I write off above the line. That's $12,000 in write-off against any business income. You just got carte blanche to go make 12 grand tax-free. Would an extra $1,000 a month make a difference in your life? It'd make a difference in mine. I'd love an extra $1,000. I was talking to my son today. I want to go buy a new AR-15 and shoot rabbits. I mean, that's what I want to do in my pastime. Now, I'm just throwing that out there. I may offend someone. But here's the thing. $1,000 a month? How cool would that be? Marianne, get out and do something you love, make some money at it, And on the first $500 to $1,000 a month, you're going to pay zero tax anyway. Go out and buy a rental property and build some long-term wealth in a rental and some extra cash flow. Okay, next question, Steve.
All right. John asked, how do we capture startup expenses as we build our ability to conduct business, some of which are incurred before we establish a legal entity?
And his first name?
John.
John. So John says, Mark, how do I identify, track, and substantiate these startup costs before I even have an LLC or corporation and before I even make any money? One word, spreadsheet. Get a spreadsheet. All of you should know how to open up a computer at least and just start a spreadsheet. Get a yellow pad. Get a yellow pad and start writing down all the expenses you incurred. Keep the receipts in a shoebox, take a picture of them and scan them. I have a whole video, guys, I'm going to just say this now. I have a whole series of 50 or 60 little videos you can watch online. A few $100. You're gonna see it, some of the videos already in WorkCamper in the Small Business RVer section. When you're ready, you can upgrade and watch more videos, a few $100 tax write-off. So I know when I say some of these things, I don't want you to think, well, Mark, where am I going to learn that? I got the info. You'll get it. But here's the thing, John. Just write them down. Keep the receipts. And if you can, maybe even open a small business bank account. Dedicate a credit card to specifically business. All of you out there, start tracking your expenses. And then when you make a sale, we're going to go capture them and go back and grab them for the whole year. So you don't, now listen, you do not have to have an LLC to take a tax write-off. You do not have to have a corporation to take a tax write-off. Now there's a lot of good reasons for an LLC and corporation, and Steve and I are going to encourage it pretty much right out of the gate. You want the protection, you want the substantiation, you want audit protection, you want to look legit. There's about 9 different reasons. But don't think you have to have a company to start tracking your expenses, John. Just start writing them down. Steve.
A. Beck says, you have a business name you would like to use, say XYZ Company. Can you or should you use this name before you set it up as an LLC?
So A. Beck says, Mark, I want to set up the new company, Beck Enterprises. And it is such a cool name. And I want to use this name, Beck Enterprises, everywhere in the country. Can I start using it before I go get my LLC or corporation, or maybe even a trademark? I don't think you have to have a name. This is important, ABEC. You don't have to have a business name, like John was asking about tracking expenses. Mary Ann doesn't need to have a business name to start her business. So don't worry about the name per se to substantiate your business. But let's say ABEC goes, well, I need this name because I'm going to really market it. I'm going to put out business cards, I'm going to put out letters, I'm going to make a sign. Before you really start branding, that's the word I would say, ABEC, is that before you start branding a name, you better lock it down. Make sure that it's available in your state. Make sure the URL is available on the web, maybe. Make sure it's not trademarked. Beck Enterprises is actually an international construction company. I don't know if you know that. So if you wanted to do Beck Enterprises, you'd have some hard times in the future if you really started to brand it. But notice how I use the word, you can start your business right away with any name you want. But if you're going to brand the name, it'd be good to go get it locked down with an LLC, a corporation, a DBA, a trademark. If we're helping you get your company set up, we'll talk through those options and which one may be best for you. Some of you don't need to go trademark the company name. Some of you just start selling crap, just get going. But at some point you're going to lock down a name, and it's in the evolution of business a good thing. One more question, Steve, or you tell me, Steve, a couple more, or should we just go on to the next topic? You tell me.
I think time-wise you need to move forward.
Okay, I'm going to move forward. Okay, now let's talk about these entities for a minute. We're going to get into domicile and some extra write-offs. Now, when you start your business, you're generally going to start out as a sole proprietor. You may only be a sole proprietor for a few days or hours or minutes or a month or week, but ultimately you're going to need to set up an entity. Now, when I set up entities for clients, I divide their lives into 2 sides. operations and investments. Now let me explain how these two play out. This is really important. So, for example, operations is running an ongoing business. So if I'm going to sell a product or a service, I'm going to start out as a sole proprietor with no protection. That's why I put little dots around it. But I'm going to quickly either go to an LLC or an S Corp right out of the gate. Some of you maybe should need an entity already. I can do an LLC and then morph it into an S corporation later. And a lot of clients take that kind of baby step. We'll do an LLC, lock down the name, and then we'll convert it to an S corp later. I'll tell you why. Some of you go straight to a corporation right out of the gate. This is your operations side. We're talking 1099s, selling a product, selling a service, just out kind of doing your thing on the internet or on the street. That is operations. Some of you are going to go out and buy rental property. Some of you already own rental property. Some of you may turn your home into a rental property and then hit the open road with your RV. That's not a bad idea. I love rental property. Rental property is generally an LLC, boom, bada bang. You might put 2 or 3 properties in an LLC, and you register the LLC where your rental property is. So if you live in Georgia, and you're going to hit the open road in your RV and set up your domicile in South Dakota, then we might set up a Georgia LLC for your rentals that are now in Georgia. This is your passive side. Profit comes out whenever you want it. But the LLC is on title, the LLC is the landlord, the LLC is on the lease agreement, and the LLC protects you from anything that could go wrong. That concept is the LLC for rental property, but it's on this side of the wall. Over here, you're running your operations. Now, like I said, I'm going to get deep here. For some of you that are in this realm, and I know that, so there's people on the line that said, Mark, you set up my LLC. When do I do an S Corp? Now, here's the deal. If you just set up a sole proprietorship or an LLC, let's say you bring in 50 grand a year. You bring in 50,000 a year. That's maybe 4,000 a month. Doing something, selling a product or service. That's not that hard once you start doing business, 4,000 a month. And then let's say you write off 10 grand of all sorts of expenses, cell phone, travel, dining, entertainment. I think it'd be more than 10, but let's be conservative. So now you netted $40,000. That's your net. You can take it and go put it in your personal account and go buy groceries and underwear. But you netted $40,000. When you net $40,000 in your business, and some of you have been doing this in your small business for years, what do you pay? You pay self-employment tax. This is an ugly tax, folks. 15.3%. Ugh! The self-employment tax is hitting some of you right now. I know you're out there. You've been doing consulting or services and product. You've been a sole proprietorship or an LLC for years, and now you're paying self-employment tax on every dollar. But here's what's cool with the S corporation. Once you form a corporation and the S corporation, when you make that same 50 grand, 50 grand comes in up above, 10 grand in expenses, and you net 40. You net 40, no self-employment tax, and no corporate tax, and no Obamacare. Woo! Is this awesome? That's what's cool about an S Corp. But there's a catch, and for those of you that are out there as an S Corp, you know you've got to take a little salary. So you take a salary, and let's just split it in half for example here. So salary might be 20 grand, and my net profit might be 20 grand. See, I took the 40 in profit. Remember, 50 came in, 10 in expenses, and I netted 40. So now I take 20 in a W-2, and 20 in what they call a K-1 or dividend. It kind of comes out the bottom. But here's the beauty. You only pay FICA or self-employment tax on the 20. So I just saved 15% on 20 grand. Woo! Is that serious or what? You just saved $3,000. Now, if I don't do the S Corp, remember, I have net of 40 grand. So when I net 40 grand, I pay self-employment tax at 15.3%, $6,000. By simply going to an S Corp, you can cut that in half. Now I'm only paying $3,000. Do you think it might make sense to incorporate and save $3,000 just on this simple example? The more money you make, the more you save. So, here's the deal. In summary, many of my clients, what this looks like is we set up a sole proprietorship or an LLC. They graduate into an S Corp when the time is right. I'm here for you along the way. It costs $100 to convert to an S Corp. Once you have your LLC, we can convert to an S Corp anytime. Then on the other side of the wall is your LLC for your rentals. Operations, investments, sales, rent, realtor, building, dentist, building. See, there's a separation. Now your RV, as an example, could be a piece of equipment, a delivery truck, if you will, on the S Corp side or on the rental side. See, the RV is not the business. The RV is a tool to help you succeed at business. That's why you get to write it off. Now again, we'll come to sticks and bricks and domicile in a minute. But the first point is, how are you going to set up your business? John, again, start tracking your expenses. Mary Ann, do something. Hey, Beck, don't worry about the name. Just get going. Now, once you start making any sales at all, and you might have exposure and want to lock down the name and get it going, you might not even be doing RV inspections and all sorts of ideas. Then we set up your entity, and you start getting formal and looking legit. And that's cool. And you can use that one company. Many of my clients, once they graduate into that LLC/S Corp, you can run multiple businesses into that one entity. I do law, I do accounting, I do education. On the weekends, I do hair and nails. And then in the evenings, I do drywall. So, I mean, I do it all. And I run it all through my one S Corp. That was a joke. I really don't do law. I just do hair and nails. Okay, now, anyway. So, brother, sister, S Corp LLC, operations, holdings. So, now that's just a quick example of where your entities might fit. I don't want you to stress about it. You might have partnerships. You might have 10, 20 rentals. You might have property in 3 different states. You might have a big business with $1 million in income. But the foundational concept is the same. S Corp here, LLC for holdings. Every dentist, doctor, lawyer, realtor, contractor, internet salesman, Avon rep, we're all S Corps. My clients that own rental property, all LLC, brother, sister. And here's what's cool, guys. It all comes down together in your family trust. See, we bring your estate plan together. So your trust and will, so you're not like Prince up in Minnesota in court. His family's up in court. Prince is up in heaven, happy, right? We hope. But trust owns the S Corp. The trust owns the LLC. This is your will and powers of attorney. The trust may own your home. It may have life insurance in it. But we bring together your estate plan with your business plan with your tax plan. See how it's all coordinated? This is why your lawyer and accountant have got to get on the same freaking page. We want to make sure everybody's talking the same language. We've been growing strong for 15 years because of this. We're trying to bring it together. I met Steve 10 years ago. We've known each other and been working together, and it's been a wonderful relationship. And boom, that's entities. Now that's just kind of a precursor here. We're going to get into starting your business a little bit more, and then domicile and a few other things. Steve, any questions from the camp?
Yes, Darcy says, and you answered this, but just to reiterate for Darcy, my husband and I both run a business. 1, carpenter, 2, virtual assistant. Can we run both through the same S corporation? Okay, so for everybody, Darcy gave us a great example. Her husband's a carpenter, she's a virtual assistant. Can they run them through the same entity? And the answer is yes. We love it. Call it Darcy Enterprises. Your husband's gonna have to live with it. Darcy Enterprises, virtual assistant, contractor. Boom! We set up your salary. We write off everything under the sun. And Darcy, you have a feeling you may have children. Boom, we've set up a little company to hire your kids.
We have your trust in the mix. If anything happens to you guys, we might fund a 401k. We're going to write off the RV. Woo! It starts to blow up. It gets exciting. The S Corp is just the foundation. Guys, I'm on strategy number 2. Number 1 is have a business. Number 2 is set it up right. Maybe 3 is track your startup, but whatever. I mean, this is just the beginning. It's a whole new world. Just come and see. Okay, Steve said no singing, so I guess I can't sing on this webinar. Okay, sorry. Steve, next.
If you don't have a small,
I even made Steve laugh. This is good. Okay, sorry.
if you don't have a small business, can you still deduct your expenses from job to job, assuming they're saying they're a work camper?
Okay. Okay, so the question was, Mark, if I don't have a small business, can I still write off my expenses going from job to job? 2 thoughts. Three thoughts. The first one is, it's going to be hard. You're not going to get as much bang for your buck. I got to say it right now. And that's okay. I'm not saying what you're doing is bad, or you're dumb or stupid, or you're doing it the wrong way. Some of you are like, Mark, I don't want a small business. I'm going to go from W-2 job to W-2 job in my RV, and I'm going to play with domicile, and I'm going to live on the road. That's cool. I'm cool. But your write-offs are going to be really limited. Thought number 2. If you have a stick and brick home, the RV might be a write-off as a second home. So that's one area we might write off at least the interest on the RV. My third thought is, you're going to get maybe a moving expense deduction because you're moving. But see, are you really moving from state to state? Or are you saying my domicile is in Florida or South Dakota and I'm just out doing W-2 work? I just hate to say that. I think as a RVer, let me say this, and you got to hear the truth. I mean, I don't want to, again, blow smoke up your skirts, is if you are a full-time RVer doing W-2 work, and we're going to put your domicile in a non-tax state, that's our goal. The deductions for being on the open road and for your RV are going to be extremely limited or non-existent. Now, if you can just add a small business aspect to that, again, it's that whole new world, and I won't sing again. But so I hate to say, so there's a straight answer for you. So that's why I need you to have an open mind to this business concept. It's going to help. It's going to make you more money. It's going to make you happier. It's going to give you a write-off or 2. Steve, any more?
Stacy asked, if you have rental properties and sell jewelry on Etsy, are those 2 businesses, or would you make them 1?
Okay, and first name, Julie?
Stacy.
Stacy. I heard jewelry and got Julie out of that. Sorry, Stacy. Okay, so Stacy says, Mark, I sell jewelry on Etsy. You go, girl. That's freaking awesome. My daughter would love to talk to you. You got to follow her on Instagram. So if you're doing Etsy, that is an operational business. Guys, do you know I go to conferences that have nothing to do with RVs and just how to make money on the internet? It is unbelievable. Internet marketing, Amazon reselling, unbelievable. So Stacy's onto something here. So Stacy, you have either a sole proprietorship, and with an internet-based business, you may just sitting in the basement on your computer. You might just stay a sole proprietor. At some point, you might LLC up, and it depends on how much money you're making. If you're making more than 30 grand a year, we're going to go to an S corp right away. But this is her. See this? This is her jewelry business. This is the sales business. Then she said she has a rental property. Whole other business. Whole other business. So over here, we have an LLC that owns a rental. It's rental income, it's depreciated, you want protection, this is a golden egg, or this is the goose laying the golden egg. We want this protected. Separate bank account. Separate bank account. So Stacy, everybody out there, when you have multiple businesses, you're going to have separate banking. I have a whole QuickBooks course that as you get through the Business RVer School, you're going to probably graduate to learning QuickBooks. And that's good. Don't be afraid of it. It actually, the system sets you free. So you're not stressed about books. Steve, anything else?
One last question before we move on. William asked, does the RV have to provide a value to the business other than a place for you to live?
Oh, okay. I think he's opened up the RV domicile question. Okay. And first name was?
William.
William. Okay, everybody blame William. You can, hate him on the chat. I'm just joking. William's going to push us to our next topic. I'm gonna still get some other good ones. We're not even to an hour here, folks. This is good stuff. Keep, go refill your Diet Coke and get some more popcorn. Okay, so what William says, does the RV provide any additional benefit from a tax perspective other than your place where you live? Is that kind of what he asked?
Yeah, does the RV have to provide a value to the business other than a place for
Okay,
you?
I'm going to repeat his question because it's a very important one. William says, does the RV have to provide a value to the business other than a place to live? Yeah, it has to. Because the problem is, if you're a full-time RVer, you actually are making the situation harder, not better. So let's do a new comparison here. So, the moment we've been waiting for. How do you write off your RV? How you write off your RV and your business comes down to the sticks and bricks versus full-timer. And that's how the IRS is going to classify you. So let's if you're taking notes, write this on a piece of paper and remember it. Those of you that have a sticks and bricks home with an RV are very different than those that are full-time RV. Now, be patient with me here, because there's pros and cons to both. In fact, Steve and I, when we meet with clients, we tell them, hey, what do you want? What's your lifestyle dictate? Because I don't want to let the tail wag the dog. I don't want you to structure your life, maybe, I don't want to, around a tax issue. I want you to think deeper about these topics. But let me give the pros and cons. First of all, sticks and bricks. You own a home, and let's say you're in a state that has state tax, so you're not thrilled with that. Let's say, I'll stay in the South for a minute, let's say Georgia again. You live in Georgia, and you're paying state tax, and you have a sticks and bricks home, but you have an RV parked out back. What are your pros and cons? Well, the pro is, right off the bat, is that the RV becomes a business vehicle. That's my goal. I want the RV to be a business vehicle. You're gonna use it personally once in a while, and you're gonna keep a log. I teach my clients this. Have a little log, and say, I drove the RV 15 times last year, or 15 trips, 5 of which were personal, obviously personal for something. Maybe it was a wedding, maybe it was a national park. But the other 10 trips had a business purpose. I met with a customer. I'll rattle these off, I'm not going to write them down. You met with a customer, you met with a partner or a joint venture affiliate relationship, or a vendor that's going to sell you product for your business. So Stacy, if you're out on the road, you're going to drive your RV to a convention and pick up jewelry, pick up supplies to make more jewelry. So you're either meeting with customers and making sales, you're meeting with vendors or joint ventures or affiliate partners. You may even get in your RV to go check on your rental property. You're going to load up your tools and go sit outside your rental for 2 or 3 weeks and work on your rental. The RV is your business vehicle. That entire trip is going to be a tax write-off. Well, I'm talking dining, gas, all that. Hang with me. I'm still back on the business trips. Remember, you're doing 10 trips out of your 15 trips during the year of 10. And one could be customers, vendors, or partners. You're going to check on a rental property. You might even go to a conference. Are you going to go to a Work Amper conference? Are you going to go to a Mark Kohler conference? I do 5 workshops around the country in the fall. Steve's got conferences all year long. Are you going to get in your RV and go to a conference for a business purpose? And then number 5, are you going to have your annual meeting for your company? If you have set up your LLC or corporation, are you going somewhere to have your retreat? Maybe some training, maybe meeting with a customer or vendor, and kind of a combination of it all, and having your annual meeting. See, those are all business trips. So when the RV is a business vehicle, you want to log, I did 15 trips, 5 were personal, and 10 were business. Now, William, you're not living in the RV. In this example, we'll come back to you. But for this example, people, you're living in your house, you're getting in the RV to do business. And so 2/3 of your RV is now depreciable. It's now an expense. 2/3 of your gas, 2/3 of your interest, 2/3 of the depreciation, 2/3 of repairs, 2/3 of maintenance. Big deal? Way big deal. So if you can go out and start making money, that all becomes, these other write-offs help offset that income. Now this is a sticks and bricks with an RV. We love this. Now what's the con to this column? The con is, you're strapped down to a stick and brick. And I know some of you want to hit the open road. So you hate this column. But I'm saying there's some good things here. Because the RV is not your home, which complicates things for this column. So in this column, the benefit is the RV is a business vehicle, but you may be stuck in a state that has state tax. And you also have the costs of a stick and brick home. So there's some pros and cons. That's okay. For some of you out there, you're starting your small business on the side, you're getting used to RV ownership, you're learning how to inspect an RV, you're learning how to take care of an RV, and you're going to go out on the open road in the future. You can start in this phase. Get your business off the ground. We're going to talk about how to do that in a minute. But pretty cool, right? Now, William's over here going, I'm full-time RV. Now, what's the pro for him? Well, obviously, he's in a no cost. I'm going to say zero cost home scenario. No, I know you're paying for your RV, but zero cost stick and brick. So you're not paying for that stick and brick. That's a big cost for some of you. You can't wait to get out from under that ball and chain of the house. I get it. That's a good thing of being a full-time RVer. The second good thing of being a full-time RVer is domicile. Now, for some of you that don't know what domicile is, see, William's question opened up a whole can of worms here, didn't it? Domicile. Domicile is the concept that you can move your residence to a state that may be more tax preferential. There's 7 states that are tax-free. I'm going to do these from memory. Work with me. Alaska, Washington, Florida, South Dakota, Wyoming, Texas, I want to say New Hampshire. Steve, what am I missing? I wrote it. Oh, no, I got 7. And Nevada. How can I forget Nevada? Okay, so you've got 7 states that are tax-free. Now, there's some great books that you can get on your Work Camper website that can help you evaluate state to state, because there's all sorts of issues. Estate tax, sales tax, but income tax is a big one. Because some of you, and I don't mean to be, some of you young, some of you are old. For those that are a little older, you might be starting to collect Social Security or retirement benefits. Why not move to a state where those retirement benefits are tax-free, on top of your small business income? So, domicile is a huge thing, because when you're full-time RV, you can move your domicile to another state. Now, how do you do it? Okay, now I'm going to give the highlights here. There's books about this. I write about it. But domicile, you generally are going to do 4 or 5 things. Number 1, you're going to get your driver's license in that state. You're going to have to plan a trip, go out there, go through the freaking DMV, take the test again if you have to, and get your driver's license in the state where you're going to claim that you're a resident. Number 2, you're going to want to have an address there. Now, there's all sorts of services. Steve's organization has lots of resources on people that you can use for mail forwarding and business address services. 3rd, you're going to register to vote. in that state. And number 4, and the big one, is you've got to spend a little time there, people. And it's kind of, drive through there once in a while. That's a big deal. And what happens is, though, is your life, if you look at a pie chart, if your domicile is South Dakota, but then you go down and work as a W-2 wage earner in Wisconsin, let's say Wisconsin, not Wyoming, non-state tax. You go and earn a W-2 in Wisconsin, or you go over to Illinois and earn a W-2, and then you go over to Oregon and earn a W-2. Well, you've got to pay state tax in the state where you earned that W-2. But all your other income can come tax-free through the state where you're a domicile. Because you're going to just file part year in those other states. As your accountant, you're going to give us your W-2s. But your business income, your retirement income, your investment income will all come through the state where you chose domicile. Now, there are articles and books written on probably 10 other ways to establish domicile. Some states are going to have a few other specific things and this and that. But the biggies are your driver's license, your voter registration, where's your cell phone, that's another one. Where's your gym membership? If you have a gym. Where are you registered as a person living, per se? Where is that address? So you get to choose your domicile. That's a major benefit in this column. Anything you'd add, Steve? I want to say that because you teach that same concept. Am I missing anything? Okay, Steve's happy with my comments. He's my quality control. Okay, last point on this is the con. And this is where, William, it comes to you. When you get the benefit of choosing domicile, and the benefit of not having stick and brick, and the benefit of living on the open road and the lower cost of living, and the ability to see this amazing country, the RV becomes your home. And when the RV is your primary residence, we can't write off much of anything. We're going to write off mileage going to your different business locations, not going to your different jobs, going to your different business locations. See, who was it that asked earlier that said, well, Mark, if I travel between job to job, what are my write-offs? Nothing, because you're just an employee. But when you're a full-time RVer and you're going to business location to business location, and you or your spouse might have a W-2 there, okay. But you also have a business purpose there. Now I got a write-off. Now I can at least do mileage. Home office is a difficult one in an RV. You have to have a dedicated space in the RV to the home office location. There's been some court cases on this that kind of creates a chilling effect. Some bozo tried to get too aggressive in this area and ruined it for all of us. And then he fought it in the IRS, and what's going to happen if you fight it yourself, So we've got this dumb case out there that causes some problems for us. But if you have the type of RV with a design where there's a dedicated space to an office, that's okay. Also, you may have a towed vehicle behind your RV, and you may use that for business once you land to your location, right? That's okay. We can talk mileage for that vehicle. It depends on what type of business you're doing as well. There's a lot of variables here. I'm hitting the highlights, but the general rule is, William, you're not going to be able to write off much of your RV because it is your home. And even if you say it's totally business purpose, the IRS has said, yeah, you sleep there, bud, so it's tough. But this is an okay analysis, people. You want to look at what column I'm in. I've had clients go from sticks and bricks to full-time RV, back to sticks and bricks. It's okay. We're going to use what method in your tax year that makes the most sense. And if your accountant's brain blows up when you bring up these concepts, you've got the wrong accountant. Sometimes you have to upgrade your professionals when your life changes. And this is a big deal. I just had a phone call literally an hour before this. I met with these two ladies that said, Mark, we met with you last year. You talked about how to put your kids on payroll. We were going to write off cell phones for the family because everybody's working in the business. But we got busy and we just went to our local accountant. And he didn't let us write any of that off. And I go, well, you paid a lot more in tax. And they go, yeah, we know. But we didn't have the heart to fire him when we were in the process. I said, you're the captain of your own ship. So people, as you're learning strategies at Work Camper, as I'm sharing strategies with you, some of you are going to have to go teach your accountant. And when they poo-poo it because it wasn't their idea, or they're too conservative or stodgy, or they treat you like a child, fire them. And I don't care if it's your brother-in-law. You need to upgrade to a better professional. These concepts, your accountant should be able to explain them to you, not you explain them to your accountant. Anyway, okay, Steve, so there's a round on domicile versus sticks and bricks, writing off your RV. Some specifics: track your purchase cost, track your trips with a log, track your mileage, track your expenses. And guys, you can all do this with those little log books you buy at the Flying J as you're going, just get one and put it in the glove box of the RV. When you're sitting there looking at the stars, take a few minutes to write down a few notes, guys. It'll pay off. Learn to be a good bookkeeper. Another important point: a lot of people, when they start small business, they forget there's a little bit of bookkeeping. There's a little bit of record keeping. You've got to start training yourself to do that. When you're an employee, you show up at work, you do your job, you leave. Well, when you're an entrepreneur, you never leave the business, and you need to keep track of your own time, your track of your expenses, track your income. Have a method. The system will set you free. Have a system. Don't throw it all in a shoebox. Okay, Steve, any questions at this juncture?
Oh, you lit the fire.
I lit a fire? Oh no, we got a bunch of comments. All right.
So many that I'm having a hard time keeping up with them on my screen here. All right, let's just start. Carrie asks, if you have a rental home in a taxable state, but you have a domicile in a non-taxable state, plus you have a small business, do you pay tax in the taxable state on income of investment, Social Security, and small business?
Jeez. You want to throw in world peace too? Okay, let's repeat it. What's her first name?
Carrie.
Okay, Carrie, thank you. Jeez. Oh my gosh.
All right, so we have a
Okay, what do you want to know? Donald Trump's tax plan? I don't have all night, all right? Okay, I can remember it. Okay, so what's her first name?
Carrie.
Carrie. I don't remember everything. I remember everything else, but not Carrie. All right. Carrie says she has a rental in a tax state. Let's have fun with it. Let's say it's Oregon. And then she has a domicile in a non-tax state. So here's Carrie over here. Carrie's over here. And she has claimed domicile in Nevada. So we're going to assume that she's probably a full-time RVer because she's got domicile in Nevada, rental in Oregon. Love it. Okay, Carrie, we're cool. Then she says, well, Mark, I also have a small business. Okay, so over here you've got your LLC, soon to be S Corp, or sole proprietor something. So right, so here's her small business. And she has small business income that's coming out. Cool. Then she says, I've got IRA or 401k money. And she didn't say Social Security, did she? And Social Security. Boy, living the high life, huh, Carrie? Geez, income from everywhere. All right. So, IRA, 401k, Social Security, all coming into Nevada, no state tax. Small business income, no state tax. She's going to pay tax in Oregon because she has a rental in Oregon. Now, what's cool about rental property is, rental properties lose money on paper, even though they generate cash flow and value and wealth. Watch my videos on rental properties, folks. Huge. I would love all of you to have 2 or 3 rental properties in your portfolio. It's a big deal. Carries on to something here. So on paper, because of depreciation and interest deductions and all of her little trips up to Oregon to check on her rental is generating cash flow and probably a loss on paper. Now when she goes to sell that rental, there might be a gain. And Carrie, if there's a gain in Oregon, you're going to have to pay tax in Oregon because you earn the money in Oregon. But with your domicile in Nevada, we're going to say that all this business income and retirement income came into Nevada. Now, I need to give a caveat. Some of the 7 non-tax states have unique rules when it comes to retirement income. If it's earned in another state, California has historically tried to grab it if you earn your retirement in California as well. So I need to give a caveat. There's a few nuances there. But by far, the 98% general rule is Carrie's going to have tax-free income, state tax-free income, flowing into Nevada. One caveat, if Carrie becomes, let's say, an RBI inspector, an RBIC inspector, and she's out inspecting other RVs, and she cruises over to Arizona, and she inspects 10 RVs down there and spends 3 months in a park and makes an extra 10 or 20 grand, she should pay some income tax in Arizona because her business was located in Arizona for that short period of time. Now, if you're just popping into Arizona, do one inspection and get out, I'm not going to stress about it. But if you kind of set up shop in Arizona for 3 or 4 months and make some serious coin, you might have business income that's specific to one state, while the other income flows through tax-free. Anyway, great question, Carrie. Hopefully that was interesting to some of you. Go ahead, Steve.
Okay, just to give you a heads up, we're at about 15 minutes.
What? Do we have to end in 90 minutes?
We do not, it's up to you.
Okay, all right, we'll see.
All right. A number of questions in general about, do I have to have credit cards, bank accounts, etc., in my name of my LLC, for instance?
Okay. So folks, the question was, do I need to have banking, credit cards? What do I need to substantiate my business? Okay, this has opened up a topic that I wanted to hit tonight too, the starting of your business. Back to the original point, when you get your business idea going and you are ready to take it to the next step, sometimes that next step is a big question mark. All of you know WorkCamper, you wouldn't be here if you didn't. Get to their website, sign up for the Gold Small Business RVer membership. It's like 60 bucks a year. Guys, it's a freaking tax write-off. Go sign up for it. And in there I have a bunch of videos. There's a lot of support material. And there's a video on strategic planning, business planning, marketing planning. And what I teach people is your business plan is your idea. But inside your business plan, there's a strat plan or strategic plan that takes it from day 1 to day 2 to week 1 to week 5 to 3 months to 6 months to 12 months. What's your plan to make this business happen? And I walk you through some ways to build that business model. One of those is opening a bank account. You don't have to have a bank account in your individual name as a sole proprietor. But once you set up an LLC, you need a bank account in the name of the LLC or the corporation, and that's rental or operations. Once you set up an LLC, get a bank account and a tax ID number. We set up entities for clients all over the country. There's a little education and entity package in your small RVer portal. You can see that. For a little over $1,000, we're going to do an entity. You're going to get education material out the wazoo, and you're going to get a consult with me or one of my attorneys if you go that direction. Don't get sucked into something that's going to cost you $1,500, $2,000 or something, some local attorney that doesn't know what they're doing. If you need an entity, give us an opportunity to put you in a little package with education and an entity. But just think about us. But here's the point. Once you set up that LLC, you're going to get articles and operating agreement and tax ID number. Go open a bank account. I would like you to open a credit card in the name of the LLC. You might even start building corporate credit to help fund your business. That's a whole chapter in my book, Tax and Legal Playbook. Books that you can also get at the WorkCamper site. Steve and I have been helping each other for years, so the information's there. So get a credit card in the name of the LLC, get a bank account, start tracking your expenses. Maybe even get a merchant account so you can swipe cards. Back to Stacy that's selling on Etsy. Stacy is going to have a PayPal account. That PayPal will ultimately go into her business banking account. Start treating your personal account separate from your business account. Get that separating of accounting trained in your mindset. It'll save you taxes, it'll protect you in an audit, and it'll protect you in a lawsuit. Now, I would tell all of you this. It's a transition. Don't stress about this. If you get your new LLC and we have a call and we get your thing going, some of you that have already set up an entity with me, there's ongoing support with my weekly newsletter, my weekly radio show, the WorkCamper newsletters, the Small RVer Business School. All those little things are there to help you. You're going to get to learn how to manage your LLC. Today's webinar, is about helping you learn how to manage your entity. So I'm glad you're asking those questions, but get a credit card going. Now, back to the strat plan, you're also going to have a marketing plan. How am I going to build my business? Once you decide you're going to do a business, the strat plan and the marketing plan live on. You carry them with you everywhere you go. Literally in my office, 20 feet from now, I have my strat plan and marketing plan, and I carry them home to work every day. Every time I'm on a plane, every time I'm meeting with my business partner, I pull out my strat plan and marketing plan. I had lunch with Steve today. I saw it right there on the desk in front of me. Steve had his business plan, his strat plan and marketing plan right there on the desk in front of me. He's taking notes. A business owner is constantly planning and strategizing to take their business to the next level. We're constantly learning, Steve and I. You don't learn all this and then you're done. It's constant learning. So anyway, great questions. Steve?
Here's a real good one. I've heard this one many times. If I own an RV lot, this one is from Bill. He owns an RV lot in Florida, and I use it for 3 months and travel the other 9. Does my RV lot count as my sticks and bricks, and would that allow me to deduct the RV as a business vehicle?
Now, Bill says, I have a lot in Florida. I live on it 3 weeks or 3 months?
3 months.
3 months. And I park my RV there, and then after those 3 months, I hit the open road. Is that my sticks and bricks? Regrettably, Bill, if we were doing your tax return, we wouldn't sign off on that. That's hard, because it's a lot. It's not your sticks and bricks where there's a bathroom and a sink and a bed and your storage unit and your garage. A pad for your RV does not qualify as sticks and bricks. We could possibly deduct it, maybe, in some form or fashion. I'd have to think through some ideas there, but it's part of your RV experience having a pad. Steve, cool? Anything you'd add to that? Am I in right field?
You're in the right field. I know a lot of people are playing the game of they're putting up small buildings that have a bathroom and a kitchen.
Okay.
Kind of playing
okay.
that game.
So Steve did bring up a good point. He's out on the road talking to all of you on a weekly, daily basis more than me. He said there's a little technique out there where some of you may put up a steel building, which can be very affordable, that may have a pad next to it. And then they put in a small bedroom, bathroom, shower scenario. And also for storage, isn't that a great idea? So you've got this steel building that's much cheaper than a bricks and sticks building, but it's a steel building. And then they're calling that their home base, sticks and bricks. Okay, don't send me a picture of it when you turn in your tax return. But it could be a possibility. I'm open to that. I like it. You're meeting all the qualifications. So Bill, think about that. That could be a good idea.
Which brings up, a couple of people have asked, how many of your clients get audited?
Oh, okay. Man, so the question was, how many of my clients get audited? Well, that's a fair question when some of you are going, oh my gosh, my CPA never talks like this. Okay, a few thoughts. First of all, I've never had a client in the last 8 to 9 years that we've been helping Steve with his work camper team and RV clients. We've never had a client audited for an RV deduction for one of our clients. Audits happen, but we don't have an overly egregious ratio of clients getting audited by any means. We are a licensed CPA firm in about 5 states. We help clients, we can do tax returns in all 50 states. But we are registered with the AICPA. We have a malpractice policy. I'm a legitimate CPA in 4 or 5 states. I can't keep track. And if you get audited, now here's important for all of you out there. Now this should be the position of any good CPA. But our position is, if you get audited, taking a write-off that we've approved and suggested or signed your return, and you get audited and it wasn't a legitimate deduction, we pay the penalties and the interest on those penalties. And we will defend you for free and not charge you to deal with it. Now, if you just get audited because your number comes up and you don't get a write-off because it was just some crazy thing or whatever, and and it wasn't our fault, then you're going to pay the bill, and it's not our problem. But anyway, we're going to give you solid recommendations. We want to be in business many years to come, and I think if you go to the Work Camper Rendezvous down in Arkansas, I'll be there. I've been there 2 out of the last 3 years. Steve's trying to talk me into coming this year. It's going to require some serious fly fishing, but I'm just playing. But if you get down, the food's always great. And if any of you haven't been to the Rendezvous, you got to go. It's a tax write-off. Go visit if you have a small business, because it's training. It's a tax write-off for training. But get down to the Rendezvous. It's awesome. And where was I going with that? I don't even know. So anyway, love it. I can't remember. Oh, I'm going to show up at Rendezvous. If I'm getting my clients audited, do you think I'm going to show my face at Rendezvous? No, I don't want to get tomatoes thrown at me. So there would be enough smack out there. If you Google my name, Mark Kohler and Caney CPAs, you're not going to have any problems. Okay, Steve, next.
All right, tying back to the question about a lot, Rick has asked, does homesteading a lot, like in an RV park that they own, have any difference in its deductibility?
The RV being deductible.
Yes.
So he said, the question was, if you homestead a lot in an RV campground or RV lot area, and you homestead a lot, much like, I guess, renting a pad, does that help your deduction of the RV? No, it's not. Again, in our column, for all of you out there that are full-time RVers, I don't want to frustrate you, but you have to think of that RV as your primary residence. And unless we can substantiate some sort of stick and brick home, steel building with a bathroom, whatever, if you can substantiate some other home that's legitimately a home that's paying property taxes per se, it's going to be hard to not argue that your RV is your primary residence. Now, we can play games with domicile, and you're going to get mileage deductions as you cruise around, and all sorts of extra benefits of being a full-time RVer, but I'm sorry, I hate to be the bearer of bad news for some of you that are kind of pounding this drum. Be careful.
Okay. If we go from job to job and receive a 1099 instead of a W-2,
Love it.
can we set up an LLC and become a contractor and use a biz?
Who asked that question?
This question is from Jim.
Jim, question of the day. Love it. Jim just asked, if I go from job to job and get a 1099 rather than a W-2, do I morph from an employee into a subcontractor? And Jim, yes you do. Now you have a small business income structure, and if you get those 1099s, this could be a shocker. You're going to pay self-employment tax on a lot of that net income. Not good, unless you take those 1099s and you funnel them all through your S corporation. And when you do your S corp and these 1099s come flying in, now you're a subcontractor, you're a consultant, you're whatever. You're going to take write-offs, and then you're going to have that net income here that escapes self-employment tax. To be honest, Jim, this makes sense when you're net, for all of you out there, you're going to convert to an S corp when you're making around 30 to 40 grand net. So you might bring in 60, have 20 in write-offs, netting 40. You're going to be a perfect candidate for an S corp. You may even bring in 50, write off 20, and net 30, and I may kick you into an S corp. Depends on what state you're in. But those 1099s are awesome. And guys, that's, Bill, earlier you were asking, I'm going from job to job, what write-off do I get? Not when you're a W-2, there's nothing. But when Jim is going from job to job as a 1099, woo, opens a whole new world. So one thing that Steve has talked to a lot of people about is that if you can negotiate a 1099 situation where you go, you're in a lot better position. For example, let's say you get hired to go be a host at a campground. And if you can talk the campground owner into a 1099, which may work great, That would be phenomenal. Now, in some situations where they require you to be at a desk and you're going to look like an employee and talk like an employee and work like an employee and you're going to get paid hourly like an employee, you're going to be an employee. But if there's a lot of flexibility and latitude in what your job is, a 1099 could be a great fit. Steve. And let me say this too, folks. I know this was a 90-minute broadcast. We may go over a little bit. It's a value to you. I don't mind. I'm taking Steve to dinner after this, and we're going to go to what's called Big Judd's. It was, my video crew, is it not the best? Okay, Big Judd's. It was on Man vs. Food. This is a hamburger bigger than Steve's head. It's huge. So we're going to go take a picture of this, and we're going to throw it out on Work Camper Facebook tonight. So you're going to see Steve inhale this Man vs. Food burger. It's going to be sweet. So, okay. So we're going to go over. Steve, question.
All right. Rick asks, a lot of folks need to have a little more definition of understanding the difference between an LLC and an S corporation.
Okay. So the question was, can you give us more of a difference between an LLC and an S corp? Okay. Here's my diagram that does this. Your first option in doing a small business is a sole proprietor. Your second option is being a C corp. Your next option, that was all you could be 60 years ago, was a sole prop or a C corp. Then, in the 1950s, the S corp came along. Then in 1972, in Wyoming, the first state, you had the LLC come along. These are the four primary ways of doing business. There's LPs, series LLCs, FLPs, triple LPs, double LPs. There's all this alphabet soup out there. But 90% of your entities, if not 95%, are going to be in these four areas. So let's just look at differences. Which one gives you no asset protection? I'm going to give you a hint. This one. No asset protection in an S corp. If you have a lemonade stand and someone slips on a lemon peel in front of your lemonade stand, you're liable. If you have a rental property and carry your rental property, are there any problems there? Someone gets sued, they're licking mold in the basement, termites destroy the stairs, kids are breathing asbestos from the fans, you got problems. You're personally liable. Sole proprietor. But these three entities all give you asset protection. So the question was, is there a difference between LLCs, S corps, and C corps when it comes to asset protection? No difference when protecting you from the operations of the business. No difference. So what does it come down to? It comes down to two things. Taxes and capital. Capital, are you going to raise capital in a business? That, my friends, is where the C corp comes into play. You've heard the radio stations late at night. Every Fortune 500 company is a C corp in Nevada or Delaware. Call now. Give us your credit card. We'll set you up. I know some of you may be set up in Nevada, even though you don't live in Nevada. It's kind of a mess, a disaster. We literally have a service called FixMyLegalZoomEntity.com. Give us a call. But C corps are huge. They're great if you're going to go public. They have thousands and thousands of shareholders. That's what C corps are good for. But with an S corp, you can only have 125 shareholders. Can't raise a lot of capital with S corps. And LLCs aren't built to sell stock. They're just not built that way. They're built for partnerships or holding property. So we come down to the tax issue. In a C corp, you have double tax. The corporation, Microsoft, makes money, it pays tax. Then it gives shareholders money and they pay tax. Sole proprietors, we were just talking about Jim. Jim's going to get all these 1099s coming in. And then he's going to write off as much as he can, but he's going to pay self-employment tax, then pay income tax. If he's lucky, no state tax, but who knows? Double tax, not good. These two entities, But an S corp allows us to save on self-employment tax and you do a little salary dividend split. I have a whole video or two on this strategy in the video series library. The S Corp is great for saving self-employment tax, but an LLC pays SE tax unless it's a rental. So LLCs do not save taxes. LLCs, let me repeat this, LLCs do not save any taxes. They're there for asset protection. And they're there to allow you a stepping stone easily to the S Corp. They give you protection. The LLC is important, but they don't save taxes. S Corps are built to save taxes as well as protection. So when we look at these two entities, I'm going to get a little technical here. LLCs come into play in 3 areas. Steve's seen me give this. This is where I'm getting deep for some of you. First, you can use an LLC to hold rentals. Makes sense. We want protection. There's no self-employment tax on rental income. It's good. I can also take an LLC and convert it into an S Corp when I start making $30,000 or more. So I start with my LLC, get my bank account, get my credit cards, get going, get my merchant account, build my corporate credit, get legit, reserve the name, all those good things, and then I can convert to an S Corp when the time's right. So an LLC is like a chameleon in this area. The third area I can use an LLC is if Steve calls me up and goes, Mark, let's start a business tomorrow. I'm like, okay, Steve, I love you, man. What business are we starting? Are we buying a rental? No, Mark, not a rental. I'm like, okay, what are we doing? We're going to import, export seafood from Asia, and we're going to sell it on the streets of LA. I'm like, I love it. Sounds like a great idea. Okay. Well, that's going to cost me self-employment tax. So what entity saves me self-employment tax? I'm going to repeat that. Which entity saves me self-employment tax if I'm going to sell seafood on the streets of LA? It's the S Corp. Well, do I want a new S Corp? I already have one. Well, Steve has an S Corp. Why don't we partner our S Corps? And so my S Corp partners with Steve's S Corp. And what entity do we use? An LLC. An LLC is great for partnerships. An LLC can partner between 2 S Corps for ordinary income. An LLC can hold rentals, and Steve and I can also have an LLC to hold rentals. They're great for partnerships. But when it comes to ordinary income, where do I need to launder the money through? Sorry. Where do I need to clean the money? I need it to go through my S Corp. And that's what we use S Corps for. Again, every ordinary income professional uses them. So I hope that answers your question.
A tail of that is Darcy's asking, can you move from a sole proprietor straight to an S Corp?
Okay, Stacy says, can you move straight from a sole proprietor to an S Corp? Okay, yes, but there's a drawback. Okay, I'm a sole proprietor, and all of a sudden I go, Mark, I'm ready to go to an S Corp. Great! Boom, you're making money. Boom, you got a 1099. Let's do it. Boom, S Corp. That's great. The S Corp starts the minute you call your mom and call me. That's when the S Corp starts. But what's cool about an LLC is if some of you are like, well, Mark, I don't know how much money I'm going to make this year. It could totally kick butt and I could make a ton, but I don't know. And I don't want to set up an S Corp right away, but I don't want to be an S Corp right away because I don't want to have to do that payroll thing yet. What do I do? Well, the LLC allows you to start the clock now, and then I can become an S Corp later by simply filing one sheet of paper and backdate the S Corp to the beginning. I can't backdate it as sole proprietor to the beginning of 2016. But if you were an LLC at the beginning of the year, when it's time to make you an S Corp, I can backdate it. So to answer your question, you can go straight to an S Corp with a sole prop, but I can backdate an LLC into an S Corp. Make sense? Hope so. Okay, I want to hit, can I go on to another topic maybe? Okay, I'm going to start wrapping things up, and I want to wrap up with some tax points. Guys, this is not all about, let me repeat this, this is not all about trying to write off your RV. Guys, there's so many more expenses you might be missing out on. Let's say you start your small business. It could be a rental, LLC. It could be a small business over here, and I don't know how you structure it. What are the write-offs you should be thinking about? Guys, in my little video series, and this little broadcast tonight is not about me selling a video series to you right now. There's no call to action to go spend your credit card with me at the end of this call. There's no call to action to go set up your entity with me at the end of this. I'm going to give you my contact information, and I want you to know I'm a resource for you. But so don't stress. But what I'm saying is, I've shot a bunch of videos. I saw 50 more videos on all of these tax and legal and estate planning and retirement strategies. Over the last month, I shot 50 videos. I'm uploading those into my membership site where I have my little video series. For those of you that have already purchased that, when you set up your entity with me, you're going to get an email in the next few weeks, and it's going to go, all the videos are up. My video guys, they're uploading every night. So as soon as they're up, we're going to turn it on. Those videos are amazing. I've got all sorts of write-offs. So let me give you a little thing that you should be thinking about. And as I mention these, just know, I've got all these little videos you can watch. I've got my 3 best-selling books. They're great. I got a newsletter. I've got a radio show. You can get this info. Don't feel like you have to pay me per hour. Steve and I are there to give you ongoing support. Now, if you feel like you've got to call me for a consult or one of my team members, we can do it. But just know there's a lot of great education, and you can get to this through the WordCamper website. So what are the write-offs? Okay, this is important. Sorry. Thanks for letting me give you that little background, because that's an important point. We want to be there for ongoing support. I'm just going to start rattling off some of these write-offs. Dining. Dining is a huge write-off. Do you know you can write off 100% of your dining sometimes? You can write off 50% of your dining, even eating by yourself. I go through that in a whole list of areas. These are articles on my blog that are free too. Do your education. Don't give up on your education. Entertainment. I took my partner and I went fly fishing and had our corporate annual meeting. We took notes, we strategized, and went fly fishing. We wrote off the guide service. Why are you not also entertainment? Taking home office. For some of you that have stick and brick homes, we want to do the home office. Are you writing off your internet wherever you are? Are you writing off your computers and gadgets and your iPads and your iPhones and your equipment? Are you writing off your cameras, your drones, your toys? Are you writing off your car, your auto expense? Are you writing off your RV? Big one. Your family members. For those of you who have the kids under age 18 or kids that you're helping over age 18, are you getting your kids on payroll? Huge topic. My son, love him to death, going to college, calls me up a few weeks ago. Dad, it's time for tuition. What do I do? Can you help me out? I go, son, you've been working in the business, love you, you're awesome, let me help you out with tuition. Oh, but I didn't pay his tuition. I paid him through a 1099, and then he paid his tuition. I got a tax write-off for his school expense, 100%. No lifetime learning credit and all that crap. I just treated my son like a subcontractor. How many of you are supporting family members, parents, children, nieces, nephews, grandchildren? Are you helping your kids invest and build wealth? You can 1099 them and let them pay for their own expenses. Big deal? Huge topic, whole chapter in my book. Are you building corporate credit? Are you building rental property? How many rental properties do you have? Growing tax-free, tax-deferred. Do you have a Roth, an IRA, an old 401k from an old job? Could we take that old IRA and take it and form an LLC and buy a rental? Oh yeah, it's called self-directing. You can self-direct your retirement account. Some of you that may want to take your old 401k and start a business. You can even form a company with your old retirement account to fund the business and start a franchise. Want to do that? Call me. All sorts of ideas. These are the topics that will help you. These are just, what did I do, 15? I got 50 videos. Where do we go next? You want to talk about travel? Love travel write-offs. Every time I take a trip, it's a travel deduction. Guys, the list goes on and on. So, keep track of these things. Some of you are going, I didn't know that was a write-off. How do I track it? Guys, here's Code Section 62 of the IRS. Any expense incurred in the production of income in a business purpose, as long as the expense has a business purpose, it's a write-off. One example, I'm going to dinner with Steve right after this. We're going to go eat this monster hamburger. It's a tax write-off because we're talking business. He has a business, I have a business, we're doing business together. Tax write-off. I could take Steve and go, let's go golf 9 holes first. Entertainment expense for golf, then go get the burger. Steve, I'm looking at a camera that Steve bought to film this video. Tax deduction, 100%. Guys, we want to be thinking of what are we buying and how can I use it in my business? Put it on a sheet of paper, put it on a spreadsheet. I have 15 videos on QuickBooks included in our package. I'll teach you how to do the books. Guys, the American dream is real. You can live the American dream. It's not out of reach. Don't worry about getting a job. Create your business. It's a whole different mindset. And it's doable. Track your expenses. If I don't let you write off all of your RV, it's okay. It's not the end of the world. But go out and make money. I don't want you to build a business to lose money. I want you to build a business to make money, and let's write off as much as we can against it. If you're married, we're going to have a business where you both own it and multiple sources of income. If you're single or married and have kids, are we going to get the kids on payroll? Do you have a will and a trust? Are we combining everything? When you're out on the road, heaven forbid there's an accident, what's the safety net? Do you have a game plan? All these questions are important, and they can be answered with ongoing education. Now, unless we have a burning question, I don't mind. We're going to wrap it up. Maybe 2 or 3 questions, Steve. It's up to you. We can call it quits. You're the boss.
Well, there's been a couple of questions I've kind of put off.
Okay, two or three questions here, folks.
Okay, let me get back to it here. It has to do with when I'm volunteering. If I'm volunteering, for instance, for a national park or a state park, what type of expenses can I take?
Not much. Her question was, if I'm, or he or she, was saying if I volunteer for a state park and I go out and camp my RV and park my RV and help out, do I get a tax deduction in that process? You don't. Only if you write a check to the organization do you get a charitable deduction. Hours served is not a tax deduction. For example, I have doctors that got on a plane and went to Haiti to help with the big tsunami, whatever it was. It wasn't a tsunami, but was it down in Haiti? Hurricane. There was a big hurricane in Haiti. They went down there and they worked for a week. They didn't get a tax deduction for working for a week in Haiti. They got a tax deduction if they wrote a check to the orphanage before they left. So here's my suggestion. Here, this is good. Everybody listen. If you're going to go volunteer with your RV and park it at a national park or a campground and volunteer, you better be selling Cutco knives out of the back. Are you selling Avon down the street? Are you selling lotions and potions? Are you selling jerky? Are you selling Etsy jewelry online in your RV at night? Are you talking business with someone? Are you doing an RV inspection, an RV repair? Just have a business purpose while you volunteer. Boom! Now I got a write-off. Now we're talking business.
Perfect. All right, 2 questions. We'll call it good.
2 questions and we're done.
Yep. How do you move an LLC to another state if you already have one state?
Okay. Question is, how do you move an LLC to another state if you already have one? Some of you may have gotten sucked into this Nevada or Delaware thing and you have an LLC there and you live in freaking South Dakota. Whatever. We literally have, I'm not kidding, we have a full-time paralegal and all she does is fix people's entities. Literally. That's her job, is fixing, and we call it a cleanup service. So what we would normally do is we might do your minutes, your bylaws, your operating agreement. Make sure you have a corporate book and all the guts. We want to update it. Even if it's an LLC, you need all those pieces and parts. Don't let anybody trick you into Robert Shapiro on a sexy video of LegalZoom selling you it's one piece of paper. It's not. You need the whole package. And if you're in the wrong state, what we do is we file articles of domestication in the state where you're supposed to be. So if you have a Nevada LLC, but you're supposed to be in South Dakota, we file articles of domestication in South Dakota. And it moves the LLC to South Dakota, and you get to keep the same tax ID number, the same bank account, and then we dissolve it in Nevada. Make sure you make that extra step. Some states there's no fee for a dissolution. Some states you have to pay $50. File the paperwork. We have a paralegal, they can help do it. You know what, maybe to this point I'll at least say it. If you need to reach me, our website, see, I can send you to the accounting firm or law firm. I'm going to just send you to my site. You can sign up for our newsletter. You can reach us. Is that okay, Steve? Throw that out?
Yes.
So it's Mark, and I guess Steve will probably type it in there in the chat window. It's markjkohler.com. So Mark, J as in Jolly, Kohler, Kohler.com. Go to my website, sign up for my free ebook on 10 mistakes small business owners make, and you get my newsletter every week, and would love to have you follow us. If you need a consult, we have a 1-800 number, 888, no, sorry, 801, no, it's 888, sorry, it's a tricky one, 888-801-0010. So 888-801-0010. Is that right? Dylan, will you go look at my web? I've got it. Corey, you're on the web? Just type in KKOS Lawyers. Look at the contact number on the right. 888-801-0010. I think that's right. Sorry, it's been a long day. Can't remember my own phone number.
All right, one last question.
One last question.
All right, now combining actually two or three, have been questions about what's the IRS requirements for minimum profit to take business deductions and tie that in with when can I take startup deductions?
Okay, the question was, what is the IRS rule on when I can take deductions, how many deductions, how much income, losses, startup costs, the whole 9 yards. Okay, this is important. Some of the accountants out there listening are cringing because they're like, Mark, you haven't brought up the H word. Hobby loss. Here's the rule. You can't set up a business and lose money every year. That's called a hobby. Now, it doesn't count with rental real estate, Carrie. Love it. You can have rental real estate that loses money every year on paper, not a hobby. But if you start a business and you're selling jewelry on Etsy and you lose money year after year, the IRS is going to go, either you're really stupid or this is just for a tax write-off. So let's see what's going on here. And you get a nasty letter from the IRS. So here's the deal. You can have losses in your business. You may only have $4,000 of income and $15,000 in write-offs. So you have an $11,000 loss. I'm cool with that. That's okay. $15,000 in loss, write-offs, $4,000 in income, and you got a loss. Now, do I want to do that every year for 3 years in a row? No. You generally have to show profit 3 out of 5 years. You can lose money for a couple years, that's cool, but we need to start showing a profit. Now, is there an amount that's a problem? It becomes to what accountants call materiality. I don't want you to say, Mark, I made $372 in revenue and we're going to write off $28,000 in expenses in my RV. Do you think I'm going to sign your tax return? No. I'm going to say, slow down, Tiger. We're going to take those costs and write them off over time as a startup cost over time. Because you can take startup costs and amortize them. If your revenue isn't high enough, I'm not going to get too aggressive with your expenses. Let me say it another way. If one of you show up and go, Mark, I'm already a small business owner. I'm making 50 grand a year, 100 grand a year. I'm going to write off everything under the sun. I might write off $6,000 in dining, $3,000 in entertainment, $15,000 in kids, because you have enough income that the expenses look legitimate. But if you come in and go, Mark, I only brought in $3,222, am I going to write off $30,000 of expenses? I'm not. I'm going to find a balance. So the first thing, I'll come to startup costs again in here in a second, but the point is your tax return should look like a work of art. I don't want it to look too aggressive. Can you have a loss? Yes. You have to have some revenue to have a loss. Let me repeat this for everybody. You can't say, oh, I've got a business, I've got 20,000 in losses and no income. Remember with your lemonade stand, if you don't sell any lemonade, you don't have a business. You've got to show some income to have the write-offs. And then we want to make sure it's not too out of whack, not enough income and too much expenses. Just be careful. Now, startup costs. For all of you out there, go back and look at all your expenses for 2016 for your business. You might have $3,000, $4,000, or $5,000 in startup costs. You can write off up to the first $5,000 in one fell swoop. Then the rest you have to amortize over 15 years. That's okay. You'll get the write-off. It's just when. Now, the more income you have, and the sooner you have income, the less startup costs I'm going to stress about. Let me repeat that. One of the best tax strategies is get out and make some money. Because then your startup costs are over and I can start writing off more crap. Get out and make some money. Guys, I'll finish with this. Don't give up. Be persistent. Test market. Write up a business plan. Get involved in the Small Business RVer School. Keep learning. Hey, get up every morning trying to live that dream or that hobby. Don't look for a job, look for a business. This is your life, take control of it. Thanks everybody for being here. I'll be around. When you hear more about me and some videos that Steve may throw out there, I know you'll save thousands of dollars increasing your small business education. It's not just taxes and legal. It's wealth transformation. It's building wealth and living your American dream. Thanks everybody. Have a good night. Watch Facebook tonight. Wait till you see what Steve and I eat. Woo! It's going to be crazy.